Hi there, welcome to this week's market analysis. So as usual, what we're gonna do is a quick recap as to some of the events that happened last week, and we'll look into the current week risk events that you want to take note of. And after that, we'll look into the charts and share with you any opportunities that you might want to keep an eye on for the particular week. Okay, so quickly over here, if you take a look at the events calendar, last week we do have the RBA raising rates, right? So it actually beat the estimates where a lot of people were expecting the RBA to raise rate to 0.6, but we did see RBA hike it to 0.85. So from a fundamental perspective, it's actually bullish for the Aussie. However, you also want to take note that majority of the central banks are also in a tightening and rate hike process. Okay, so it's not just about buying the Aussie, but you also have other factors that can influence the price of Aussie dollar, especially if you are looking at the equities market. Last Friday, we do see a significant drop in the general Smp market as well, and that would actually affect the sentiment and also pull the Aussie dollar down together with it. Right. Now, last week we also have the Ecb Monetary Policy, which was unchanged. So from a fundamental perspective, Euro is still generally, or I would say relatively weaker as compared to some of the major banks that are currently in the rate hike process. So from a fundamental point of view, if you're looking for bearish opportunity, Euro might be one of the currency that you might want to keep an eye on. And of course, you still need to add in other factors such as technical and sentiment to that. Okay, and on Friday, we do see a sharp rise in the US CPI and core CPI, bringing inflation to, of course, a significant high of close to 8%. And that also has an impact in the equities market, where we saw Friday, when CPI actually came out, the S&P market actually dropped. Of course, when inflation is super strong, general consensus is that the Fed is going to be even more aggressive in hiking rates, and a rate hike process is not going to be in favor of an equities market, right? So there's that kind of inter-market correlation that you want to take note of as well. Okay, now with that, let's go into this week. Now this week over here, we do have a couple of important news, right? So on Wednesday, you can see we do have the US core retail sales and retail sales coming in. Following that, on Thursday midnight, we have the Fed funds rate, which again, market consensus here is expecting the Fed to raise rate by 0.5%. With the current inflation, it's not surprising to see a more aggressive rate hike. So if that's going to continue to happen, of course, from a fundamental point of view, dollar is going to be bullish, and we're going to see more upside from that. Okay, but as I always mention, it's not just about a fundamental. If you're trading the FX market, you need to take note of technicals, as well as, of course, the sentiment of the market. Okay, now later on Thursday, we have the SNB, which is the Swiss National Bank, as well as the BOE Bank of England rates. Okay, and if you take a look at this, you can see SNB is still maintaining a 0.75 in the negative territory. So fundamental Euro and Swiss is still towards the, I would say, slightly bearish side relative to some of the other banks. Okay, and you can see over here BOE is looking to hike rate by 0.25% as well. So for next week, what you can see is that the focus would generally be on the dollar as well as the pound. Okay, so that's on the risk sentiment side and the risk event. So with that, let's take a look at the technical analysis. Right, so with that, let's take a look at the dollar index for now first. Then we'll look into some of the major pairs, gold, as well as the equities market. Now, from a dollar index perspective, on the forward time frame, we can see that last week we do get a strong momentum push to the upside. Initially, I was expecting a little bit of a corrective structure, and that would give us a downside bias. However, with this bullish impulse push, okay, especially on Friday with a very strong CPI data, at least for the start of next week, we're going to continue to expect a little bit more momentum to the upside to retest the previous high back at 105. Okay, but of course, you need to also take note of the upcoming FOMC. Hey, that's gonna create some kind of volatility, and we want to then observe if price is gonna break through 105 impulsively, or we're gonna see a rejection from there. So I would say for next week, if you're taking a look at the dollar related pair, at least for the short term, you can continue to expect a little bit more upside. However, once the dollar index is tagging the 105 area, you want to be careful for any trade, because that might come in coincidentally very nicely with the FOMC. Okay, so that's an overview of the dollar. Now going into the euro dollar over here, okay, it's kind of inverse, where we see a very strong push to the downside. So next week, there's a good chance that the momentum will continue lower for the euro, and there's a good possibility we're gonna see it retest the previous bottom at 1.0350. So if you're looking at a euro dollar, I would say you want to primarily focus on the sell side and look for any decent sell opportunity. Okay, now from a technical perspective, one thing you want to be careful of course, is that we are currently retesting the 61.8 Fibonacci retracement. So there's a good chance that we might see some reaction from here. Whether is it going to be a very strong rejection, or is it going to be just a minor consolidation like that, only time will tell. However, if it's going to be a consolidation, then the probability of a downside is going to be higher. If you start to see next week we have a very strong bounce like that to the upside, then naturally you wouldn't want to be selling it, right? And you want to just be patient and wait for the next opportunity when the market presents itself again. Okay, so that's on the euro. Now on the pound dollar, rather similar in fact. Okay, same thing over here. If I pull the Fed from a swing low to the swing high, we can't see that right now we are testing between the 618 and 786. So same thing over here, we might get a little bit of a reaction on the pound, and again, if it's going to be a consolidation, we can expect this to continue lower as well towards the previous bottom at 1.2150. Okay, so euro dollar and the pound dollar is kind of similar. If you're looking at both, you want to definitely take note of your risk exposure as well for any of this trade opportunity. Now on Aussie dollar, we had a very decent run. Okay, so recall last week we did share that with this trend line over here, how the market has moved off very correctively. We are expecting kind of a move to the downside, at least for the near to short term, and we get that very nicely, of course, with the confluence of the equities market selling off. We're in a risk-off environment, and therefore the Aussie tends to be weaker, combining with the dollar strength as well, and that pushed the Aussie dollar very neatly towards this area. Now, is there a good chance where you can see more downside? The answer, of course, is possible. But what I want to see, of course, is for market to put in a little bit of a consolidation here. If that pattern happens, then of course the downside probability is still pretty high. And you can look up for a target back at this previous low around 0.6830. Okay, so that's on Aussie dollar, quite a straightforward trade over there. Kiwi dollar, quite similar. Okay, so Aussie and Kiwi, they are both what we call risk currency. And when there's a sell-off in the market, when there's a risk-off environment, Aussie and New Zealand tends to be weaker, and we do see that coming down. Okay. Now from this perspective over here, we can see that the Kiwi dollar has put in a mini double topish formation, with the neckline actually broken as well last week. And with this, we can actually pull in our swing high to swing low in terms of Fibonacci. And we do add a little bit of a confluence around the 50% and 618 Fibonacci zone. Okay, so for those of you who are interested on that, what you can do is wait for a pullback, perhaps towards the 61 and 50% Fibs in a corrective manner. Then that is where you can look for a sell opportunity back to its previous low at 0.6215. Okay, of course the pre-requirement over here is that this pullback, this retracement should go correctively. It can't go too fast. Okay, so that's on Kiwi dollar. I think it's worth monitoring. On dollar Canadian, for those of you who are managed to capitalize on that, we covered, with this three wave, there's a good chance we're going to reverse. Those who managed to catch this solid trade to the upside, you want to definitely manage that position accordingly. Now, moving forward with this strong momentum over here, we're definitely expecting more upside. But of course, the market is never gonna go in one direction all the time. So what you can expect over here is perhaps a little bit of a pullback. And again, if this forms correctively, the upside probability is still very high, and you definitely want to focus on that. Now, going to the higher time frame, we can see that the upside is huge in terms of how far this can go. There are a few possibilities of what pattern is developing over here. First, we do have this as a very obvious impulse. Whether is this corrective pattern gonna be a running flat for more upside, or this is gonna eventually still come back down first before the bigger push to the upside. Of course, we won't know for now. But what I want to highlight over here is that as long as you manage your trade, protect your capital, protect your profits, you want to ride this as far as possible, because on a higher time frame, there's a good possibility the market can take off this high, and the upside potential profit is significant. So on dollar Canadian, if you're not in, my suggestion over here is to wait for a pullback, a corrective structure like that, and then you can jump onto the next trade. So that's on the dollar Canadian. Now in terms of dollar yen, my suggestion is not to jump into any trade first. Those of you who managed to capitalize on this push here, congrats again. The market actually moved further higher than where my initial target is. But right now, of course, it's doing a little bit of consolidation, but I'm a little bit cautious. Again, every time a market push off like that, there's a good possibility it's gonna do a deeper retracement. So for me, I'm gonna be patient on the dollar yen for now and just leave it aside, not touch it. So with that, let's take a look at gold as well. Now gold has a very solid move. So you can see over here we have a very strong impulse followed by a 3-wave corrective structure. We call this an expanding flat. Very nice reaction over here with an impulse push to the upside. So going into next week, at least for the start of next week, I'm gonna maintain a bullish perspective as long as the market is able to maintain above this low at 1825. We're gonna expect more upside, right? And primarily what I want to see is for market to put in a corrective pattern first, and we'll look for more upside from there to complete the bigger 1, 2, 3. So for those of you who are interested in trading gold, do keep an eye on opportunities to get into a buy trade next week. Now in terms of Smp Equities market, last Friday we saw a significant sell-off. With the current momentum, there's a good chance we're going to see it retest the previous bottom around 3800. So if you're into equities trading or equities market, I would say at least for the start of the week, you want to focus on the sell side until when the market reaches around 3808. You want to be careful when we might see a little bit of reaction or a bounce from there. But overall equities for 2022, which is this year, is tough. And it's not as easy as just buy and you're gonna profit from it. So do take note of the risk involved if you're into the equity side of things. Now lastly, we have Bitcoin over here. So Bitcoin has been consolidating, and I would say it's just basically in a range bar environment so far as what we're seeing. There's a good chance, as you can see on this chart here, that it can come lower towards 28060, and this would then give us what we know as a expanding consolidation, and this zone here might give us an opportunity to look for a buy trade. So for those of you who are interested in the crypto and Bitcoin, next week do keep an eye around this zone. I wouldn't suggest you to just buy into it immediately when it reaches there, but do take a look at the price action of that to see if it fits into your trade plan and strategy as well. Because it can easily just retest, keep trickling down, retest the bottom, give you a double bottom before the push back to the upside. So same thing over here. Crypto is definitely a more volatile and speculative asset. If you're trading into them, do keep an eye on your risk management. Right, so that's all for me for this week's video over here. All the best to your trading, and I'll see you guys again real soon.